All right. You know what? Let's take this moment to get started. Thank you all for joining early. Um, Good morning, good afternoon, wherever you are in the world, and thank you for attending this webinar presented by Ingram Micro, devoted to helping you meet and advised for cyber insurance. This is one of the many webcasts of our Seamless Security series devoted to helping our partners grow with what the industry estimates to be a $300 billion industry by 2025 or 2026, I should say. And my name is Brianna Lau. I'm the Growth Solutions Lead here at Ingram Micro for Seamless Security. And we're joined by a special guest. We have Doug on camera, Doug Kreitzberg, CEO and founder of Seedpod Cyber. And he's going to be bringing to the table a wealth of knowledge, especially around the insurance market for both end customers as well as MSP, and helping you understand, the growing space and what's really in question when looking to be insured. So before we get started, I wanted to leave some housekeeping notes. This is a live webcast, and we're being streamed currently on Teams webinar. So if you want to share this webcast after the fact with a colleague or re-listen, it's going to be available to you to listen on demand via link. We'll be sending by email within 24 hours of this. And since we are live, please use the chat window to ask any questions that you might have during our presentation, but we have left some ample time at the end of our session to address some of those questions live. There's an ability for you to come off mute and go on camera if you do choose and ask some of those questions to either Doug and I. So looking at the agenda of what we'll be discussing today, we're going to be talking about the focus on cyber insurance and some of the trends that Doug is seeing in the market and especially in the cybersecurity space, what cyber insurance covers and the tech stack alignment that generally works in meeting those controls, Seedpod's approach in working with MSPs or your end customers, and how Seedpod can help you best position yourselves for what policies are looking for. And what are the standard do's and don'ts for MSPs when involved in cyber insurance underwriting and being involved in that process? And then later, as I discussed, we'll be closing with some Q&A. So let's get started with the next slide. Why should partners be aware of cyber insurance? So cyber insurance often starts generally as a business decision to financially insulate themselves in case of a breach, but it's also becoming a framework for policies that need to be enforced. When we look at the expected growth projections of this industry specifically, in 2022, the cyber insurance market actually closed with $13.3 billion insured, and with expectations of growing at a CAGR growth rate of 26.1%, with expectations to hit a steep number of $84 billion by 2030. So that's a large amount of organizations that will soon be looking at cyber insurance as a preventative, or sorry, I should say an insulation method for the financial risk of any breach. Cyber insurance is not new, as we all know. Following some challenging years in 2021 and 2022, we've seen cyber insurance underwriters gain some experience after widespread ransomware had led to skyrocketed payout costs and steep increases in premiums. So now as we start seeing cybersecurity shift in malicious behavior from traditional ransomware, but more towards social engineering and payment incident attacks, we start to see insurance companies also pivoting what they expect in their policy terms, becoming more specific on technical controls that they're looking for, such as MDR, for example, EDR, email filtering, web security, secure backups, and the list goes on. And we'll go specifically on some of the technical controls that a company like Seedpod is looking at. This change also affects both an MSP assuming coverage for themselves, but also for their customer, who are looking at MSPs for guidance on maintaining either the compliance with existing renewals with their insurance provider or are looking at insurance as a net new business decision, and looking to their MSP on helping them provide the coverage of what these insurance brokers are looking for. So a positive from what we see in terms of the way that we're shifting and looking at cyber insurance as a business mandate is it's going to be a specific spending driver, with clear cost benefits in respect to cyber insurance renewals and how MSPs can help advise the right technology stack. And we'll start to see that with business mandates following insurance mandates, customers will often follow the favor of MSPs that can specialize in certain areas like enabling privileged access management and multi-factor authentication, enabling next generation endpoint security and the different supportive elements that provide the managed response in related to operating as a SOC to help drive down the risk of some of these organizations. So as part of that discussion, I think it's a proper time to give segue to Doug Kreitzberg, again, founder and CEO of Seedpod, and just share his experience as being a senior insurance executive with over 20 years of experience in this industry.
Okay.
Doug, I'll pass it over to you.
All right. Thank you so much, Brianna. I really appreciate the opportunity to speak today and about the issue of cybersecurity, insurance. The marketplace has evolved over the years. It wasn't too long ago that if you had a firewall and you could write a check, you were eligible for cybersecurity insurance. Now with what's occurred with, in particular over the past few years with ransomware, that's changed remarkably here. And I guess the reasons that this is of interest or should be of interest to you as a partner, MSP in particular, is because you are really at that intersection of cybersecurity and cyber insurance when it comes to your clients. You're being asked, we talk to MSPs on a daily basis, and you're being asked to provide information, review applications that your clients are presenting or being presented with. And then, you're also needing to have those conversations with clients on what they need to have if they want to get the coverage. A little bit of background on myself. I've been in the insurance industry for 25 plus years. I started Seedpod Cyber 3 years ago when I saw really the need to have a combination of risk-based services in addition to insurance to really help, in particular, small and medium-sized businesses make sure they have both the risk controls in place as well as the risk mitigation in terms of insurance. And the way that we do that is we've created a program where we integrate our underwriting criteria with the tech stack that MSPs are already offering their clients. And to the extent that the clients are on that tech stack, they're pre-approved for coverage and they're eligible for savings up to 30 or 40%. And we'll talk more about that later on here. What I'd like to first start off with is just basically going over what cyber insurance is. And then we'll talk about the trends that have gone on that have created changes in the environment, the way that the carriers are looking at these types of risks, and then what the tech stack is that they're now focused on to be insurable, and then talk about how you, through your role, can help get your clients to the right tech stack to be insured and what that looks like. So first, basically, what is cyber insurance? So cyber insurance covers you in the event of a malicious or unintentional act that impacts the confidentiality, integrity, or accessibility of your system. And basically what that means, if we go to the next slide, Kathleen, is cyber insurance covers you when bad things happen to your system or data that harms others or harms yourself. So that's where cyber insurance comes into place. And there's a few examples of this. If we go to the next slide, the one example certainly is a data breach. And many of you may have received letters from banks or other organizations over the past few years saying that perhaps your identity has been compromised, and if you want to get credit monitoring, this is what you need to do. That's been certainly an issue that's existed for quite some time. If we go to the next slide, it's we focus on ransomware. And ransomware really I would say over the COVID years, if you will, really exploded and drove a lot of claims activity. And we'll see that in a moment. And then if you go to the next slide, you get the combination of ransomware plus data breach, kind of a ransomware data breach sandwich, in which the bad guys will take data and then hold you up for ransom because they'll say they'll expose that data or sell that data if you don't pay the ransom. And then if we go to the next slide, it's e-fraud. And these are coverages that are really coverages that protect you in the event of a social engineering. So someone pretends to be Brianna and sends an email to accounting saying, "Hey, I'm in Tokyo. I'm closing a deal, and I need $25,000 wired to this account." Unfortunately, it's not Brianna, and the money is lost. Or there's invoice manipulation fraud, in which someone gets into an email systems, identifies through the accounts receivable who the clients are, and sends notices out to clients saying, "Hey, instead of sending money to this bank account, send it to another bank account." So there's coverages for that type of activity. In terms of the types of coverages, if we go to the next slide, it really it focuses on lawsuits. So when you get sued, someone has been damaged by that action, so they sue you. So that's protection there. It will protect you, cover you for costs incurred by yourself to restore the
Completely if we
system,
can.
determine what happened, get things back up and running, and then it will also cover you for lost profits as a result of this as well. So, as an example, the average ransomware attack leaves a company offline for about 26 days. And that could be 26 days where you're not able to conduct business, or it's costing you more to conduct business, so you're losing profit during that period of time. And cyber insurance can cover that portion of costs. And when you look at kind of what are those costs in a small and medium-sized business, if we go to the next slide, the average costs, certainly vary by the type of loss. But for funds transfer, it's usually around 200,000. There are certainly examples where they've been in the millions, but the average is around 200,000. For a ransomware incident, that can range anywhere from 300,000 to 1.8 million. For small and medium-sized businesses. And that would include, the cost to recover from a ransomware attack, plus in certain situations, if you have to pay the bad guys, it would pay for the cost of the ransom itself. And then there's the lost profits. I mentioned that in conjunction with ransomware, and that's averaging around $800,000. So these are real dollars that when you think of the margins of a small and medium-sized business, this would be difficult for them to take care of without a coverage like this in place. I would also argue beyond the coverage components, what carriers do provide is a lot of expertise with regards to the incident response itself, and they bring a lot of resources to the table that aren't included into that. So when I talked earlier about the underwriting back in the day was you just needed to have a firewall and could write a check. If you go to the next slide, that's changed differently, and it's almost you're tied up to a lie detector and you're being asked difficult questions here, and the applications have gone from 1 or 2 pages now to to upwards of 20 pages in some for some carriers. And if we look at the reason why, this next graph here will show us. And what this shows is the green bars represent premiums, and the line represents what's called loss ratio. So loss ratio are basically the dollar amount of losses, loss costs, and divided by the premiums. So if the loss ratio, if that line is large relative to the green bar, well, and large as a percentage, then that means less profit to the carrier. If it's small, there's more profits to the carrier. So you can see really in the years really leading up to last year, that the blue line, the loss ratios really started ticking up. And a lot of that was due to the ransomware attacks and the claims that the carriers were paying out. And then you saw, especially last year, the green bar dramatically increased. There was on average a 92% increase in premiums that occurred. So the marketplace really got hit. Insurance got hit with rising premiums. The loss ratio shifted down slightly. It didn't shift down to the range, in total correlation with the increase in premiums, because there was still high claim activity. This year, again, there was another increase in premiums, and the loss ratios have gone down more. So what you're seeing is the impact of primarily premium increases to the loss ratio, but at the same time, what you're seeing is the impact of a look at controls, and we'll talk about that in a moment. If we go to the next slide, just to show you the kind of the coverage triggers today. So if you think when you're talking to your clients, here are some of the things that are seem to be the top triggers. The funds transfer, business email compromise. In cyber insurance circles, ransomware gets a lot of play. Quite frankly, over the past year or so, it's actually been losses from business email compromise, social engineering, funds transfer has kind of led the pack in terms of the loss cost payout. So that's the individual clicking on that link, or going ahead to authorize that wire transfer without doing some type of secondary check to make sure that it should be sent out. That those are driving costs, and certainly ransomware remains to be a big factor. Not as big as it was a couple years ago, but it's still a major factor here. And really, in terms of how where the losses are coming from, phishing, the human risk is still the largest part of the reason why. But also, certain, I would say, low-hanging fruit. Unresolved vulnerabilities that exist, which is largely through, not applying patches in a timely manner. End-of-life software still being deployed in the environment. And then misconfigurations, whether you set up an environment in the cloud, and you leave some access. There's some holes there for others to gain access to, or misconfiguration in terms of setting up an on-prem environment there too. So those are kind of the types of loss, and we'll probably see those continuing, certainly in terms of the impact that they'll have on claims activity, as well as the loss factors. So if we go to the next slide, what do carriers do when they're losing money? We kind of saw in the graph that I showed you that they will raise rates, they'll lower limits, or they'll lower certain types of coverage, and we've certainly seen that. And they may decide to exit either altogether or certain types of business. here, and including managed service providers. Some carriers have pulled out of that market as well. And then if we go to the next slide, the one thing that they always do is they pay a lot more attention to the risk that they're evaluating. So they're starting to ask more questions. Arguably, perhaps they were asking questions that they should be asking, have been asking anyway, but that's what they're doing today. So what are the carriers looking for? The carriers are looking for, certainly in kind of a broad-based terms, what's the business stability? How long has the business been in place? The types and volumes of data. Obviously, if I'm healthcare, that data has more risk around it than if I'm in manufacturing, perhaps. Governance. What's the approach that the organization takes to risk and to managing risk? The industry is certainly a major contributing factor. The size of the industry, size of the organization in terms of revenue, is usually the place where the rating begins, and then the technical controls and what's the quality or the presence of them in the environment. And if we go to the next slide, I just want to walk quickly through, what is a basic insurability kit? And the basic insurability kit, starts, quite frankly, with multi-factor authentication, and specifically multi-factor authentication remote for all remote access, and MFA for privileged access at the local level here. I just heard a claims report from a major carrier saying that over the past 3 years, they did not find one successful ransomware attack in which MFA had been deployed appropriately throughout the environment there. So that certainly is a critical area. Patching, asset inventory. We talked about the vulnerabilities. That's certainly important as part of the insurability kit. Having a backup solution, not and specifically a backup that includes one offsite with data recovery testing. So that if you do unfortunately happen to suffer a ransomware attack as an example, that you can get up to speed and use the backups as seamlessly as possible. Making sure that you have firewalls in place that aren't exposing unnecessary ports or ports like RDP alone out there, having geo-blocking in place, etc. A next-gen AV system, email filtering, DNS filtering, the presence of DMARC, SPF, and DKIM within the DNS there. That goes a long way, as you probably know, to limit some of the BEC type exposures. Endpoint detection and response, EDR, used to be a nice to have in an environment. Now it's increasingly becoming table stakes if you want to get coverage at all. Encryption at rest and in transit, security awareness, training, phishing simulation, the cloud security, which is becoming a bigger issue, obviously, as more and more organizations are going to the cloud, and having an IR plan. And I'll speak to this in particular to MSPs, but having an IR plan in place that you're also testing on an ongoing basis there. That's the basic insurability kit. There are certainly some other ones in terms of having an MDR solution, a SOC solution, XDR that can help, especially those higher risk enterprises from a security standpoint, and can also help from in managing and perhaps reducing premiums. It does within our environment. And how do we approach this? If we go to the next slide here, Seedpod Cyber, as I mentioned, we provide integrated cyber insurance solutions to and through managed service providers. We recognize the critical role that MSPs play really is that last mile into the digital infrastructure of the world's businesses. And nowadays, every business, whether they think of it or not, is a digital business. And because of the integration, the way that we work, clients of MSPs, our MSP partners, are eligible to save up to 40% on cyber insurance. And we also have a Teck E&O and cyber insurance program for our MSP partners as well, in which they can save. We provide lead generation support. We align with the targeted security categories to help you grow MRR, and we'll show that in a couple of slides in a moment here. And there's also some fee income opportunities. So our goal is really to help support you as that in supporting your clients as that cyber risk manager, and giving your clients the opportunity to benefit from that in real terms through the insurance solutions that we're able to provide, and then have you benefit through it through helping you grow your business. And the better that your clients are secure, the lower your risk is overall, which also helps in us being able to provide you good terms on your own Teck cyber. So with that, I'm going to pause. And Brianna, if you want to kind of walk through kind of what does that translate to in terms of tech stack and potential MRR uplift.
Yeah, definitely. So as Doug had briefly touched upon, there are certain CIS controls or technical controls that they're looking for in ensuring against a basic policy or an advanced policy where it's including kind of the factors of MDR, XDR, or SOC-like elements. So I wanted to get into the specifics of tech stacking, and what are the products that generally can lower and discount certain premiums by 30% off. So given this example, we're going to be looking at an average 100-person organization that generally falls under a non-high risk industry, aside from finance, healthcare, and government. And generally, when we're looking at quotes for these organizations, standard quotes range anywhere from $10,000 to $15,000 for an annual term. When you start to factor in certain basic level security, Doug touched upon certain elements like multi-factor authentication for both the network and admin, encryption of data in flight and at rest, email server, anti-malware, backup, disaster recovery, and most importantly, EDR and next-gen AV. With addition of managed support elements like vulnerability scanning, patch management, and security awareness training, MSPs can really look to advising certain products that match the CIS controls. So if Kathleen, you want to just quickly press next. Yes, exactly. We'll start to see how these products align to the certain controls that most insurance providers and underwriters are looking for when quoting you out for what specifically it would cost to be insured. So like Doug had said, when we're looking at some of the basic insurance policy controls, this is something that you can provide as a framework in terms of the product alignment. So when looking at Microsoft 365, specifically the business premium solution and its inclusion of an EDR tool and also next-gen AV and MFA, these are all supportive elements that help strengthen your organization and their security posture, things like backup, whether you're doing it with Acronis or AvePoint, Proofpoint, and some of the managed services elements. These are all kind of estimates of what it can generally cost a customer to secure their environment in alignment to what insurance providers are looking for, but also from a 100-seat perspective, what profitability you could see and expect in building managed services that are aligned to what business factors are catering towards in their security posture. So before I move it on to the next slide around advanced security policies, Doug, is there any commentary that you'd like to add around just generally like what types of organizations you're seeing adapting towards this basic insurance policy?
Right. So we see growing number of organizations begin looking into cyber insurance and needing to upgrade their stack as a result. I would say the nonprofit sector has been a big sector that we've seen in terms of the need to adopt. Their boards are asking to make sure that the organizations have cyber in place, and they need to get those controls in place in order to get it. We've seen the construction, the manufacturing areas, which have been particularly hit with ransomware, because often they're working still on end of life type systems, or systems that haven't. Are in need of upgrade. So we've seen in that area, as well as kind of distribution, whether we're talking ag distribution, food production and distribution, or other service and materials distribution areas there. Those are, organizations which historically may not have had the controls in place. We often find that we're being used, and we're okay doing it, by the MSP as the heavy, if you will, going in and saying, hey, look, if you really want to benefit from, if you want to get cyber insurance, you really need to get that MFA in place. So you really need to get the EDR in place, and let's connect with the MSP to get that done. And so that's typically what we see with this type of tech stack.
That's awesome. Thank you for that. Moving on to the next slide, Kathleen, and just to click for the things to pop up later. So when we go through the example of an advanced insurance policy, the main differentiator between, again, the basic and advanced is how the organization is adapting towards managed detection and response through a SOC management, and adding this level of machine learning intervention in a 24/7 management fashion to help protect the customer's endpoints, or in an XDR fashion, their network, their data, etc. And specifically, in looking towards the advanced insurance policy, you can see organizations actually drop their insurance quotes by 40%. So anywhere from $3,000 to $5,000 just with the adoption of MDR. I know in previous webinars, I did mention kind of the growing adoption of MDR, and how Gartner estimates that by 2025, 50% of organizations are expected to be adopting this level of service, and expecting MSPs to support them in helping manage that service for them. So as we start seeing, business factors like cyber insurance, looking at MDR as a way to reduce down the risk of companies that they insure, as well as MSPs that they insure, it's definitely important for you as a partner to look at maybe in-house supporting their customers with your own 24/7 SOC, or looking towards complementary MSSPs or ISVs that can support this specific growth initiative. Vendors like Bitdefender that we carry on Cloud Marketplace, CrowdStrike within the US, and Arctic Wolf are a few names that we carry within our line card, and can definitely help provide some of the profitability, but also some of the protection elements that the customers are looking for. Doug, is there anything that you want to comment around advanced insurance policies?
Sure. Yeah, I think when what we see, organizations that we see adopting this at a faster rate than perhaps others, are really those in the higher risk areas, healthcare in particular, financial services, banking, credit unions, and as well as wealth management areas there. And also those that may be subject to more, involved in kind of global marketing, where they want to make sure that they're adhering to regulations like GDPR, from a protection standpoint there. And larger organizations overall are also looking at these. I would say that municipalities, school districts, which have been particularly hard hit by ransomware, are evaluating these, and depending upon the budgets of are really making a move into these areas. And obviously these are also areas where the premiums are going to be larger than kind of the risk that we talked about earlier. So the potential for savings is greater, having these tools in place, as well as really having there is a good correlation to in terms of the risk reduction as well there. So those are some things that I think the MSPs, as they're in their meetings with organizations like this, should really be putting this on the table and having a good conversation around.
Yeah. Is there an equal mix of organizations that are going for basic versus advanced? Like generally, what's the makeup between the two?
I would say from the standpoint of there's growing emphasis on the MDR from the industries that I just mentioned. So that is growing fast. Now, those industries as a percentage of overall is a smaller segment, but there, I would say about 40% of what we're looking at, the businesses are really looking to add in the MDR component. 60%, they're further down the chain, so to speak, in terms of maturity, and getting them to just get an EDR solution in at the very least, with obviously the backup protection and everything else, is kind of where they'll be. But probably about a 40-60 split from
Awesome.
what we're seeing.
Great. Next slide. I'll pass it back to you, Doug.
Okay. So we've talked a lot about the how to work and kind of think about the securities for your clients. I want to spend a little bit of time talking about how to think about insurance, and there's certainly security issues with regards to your own environment. Over the past, I guess, 4 years, when you look at the impact of SolarWinds attack, the impact of the Microsoft Exchange attack, and I think almost 2 years now, the Kaseya attack, the MSPs as an industry has really been hit with claims and activity, and which has caused the marketplace to really pull away from MSPs. And the primary reason is you represent what's called aggregation risk, right? If I can get into your environment, that means I can get into hundreds of clients' environments. And we saw that in particular with Kaseya 2 years ago here. That doesn't mean that there aren't opportunities for you to save on your premiums, or that there isn't coverage out there. What has occurred, though, over the past few years, a lot of carriers have pulled out of that, and those that stayed in, a lot of them really ratcheted up their rates. We take a kind of a different approach in our analysis. We really go through and work with our MSP partners to help them identify the areas and strengthen the areas so they can present themselves as better risks. But here's a couple things that I think that you should be considering, and I would give yourself time. That's the first one. So think about this 180 days, 90 days ahead of your renewal of what you need to do. The other is make sure you're defining your revenue sources. What's important from an underwriting standpoint is to understand how much of your revenue is coming from product, how much of your revenue is coming from the services that you're providing. Some of you may be doing copier sales or other type of business, kind of non MSP related. Make sure that you're breaking that down, because that gives the carrier a good understanding of the risk profile and can really help you in terms of when they're preparing terms. Also, make sure that your services are adequately covered. I've seen probably more times than not an MSP having Teck E&O coverage that is specific to what they're going to cover in terms of the technology services. And then I look at their website, and there's a whole list of services that they say they're doing that wouldn't be covered under that policy. And so you really have to make sure, pay attention to the coverage wording, work with a broker who understands that as well as you're going through it. updating your MSA, making sure that it has adequate protections in place for you, because that's a key part to the underwriting process here. And then when we get into the technical and security questions, I won't spend a lot of time on things that we've talked about already. MFA, EDR, certainly here. But I would, role-based access control is very critical within your environment. And having good vulnerability management processes, logging and alerting, and really making sure, the keys to the kingdom for an MSP is that remote maintenance management system and the document system where you're holding the client credentials. So you really want to make sure that you've got role-based access control to your RMM and your document control, that you're not giving your level 1 techs God rights to the entire client base here. And you're having alerting. So if someone is accessing your client credentials, at hours or from countries that you wouldn't expect them to, that you're being made aware of that. And then finally, I mentioned incident response. This is something, and we work with our clients. We actually perform incident response tabletop simulations for our clients, but make sure that you're testing yours. It's a really critical process, and there's an inverse relationship between the quality of the IR plan and the costs that are ultimately incurred when an incident happens. So making sure you have a strong IR plan, you've tested it, who does what, is really critical there. And then if we go to the next slide here, this has to do with really, as you're working with your clients relating to insurance. We've talked about a lot of things, certainly around the tech stack there. At the same time, your clients are going to be, giving you an application or saying, hey, I need to get insurance, help me fill this out, or help me make sure I have these in place here. And there's a couple of things that I would recommend. One is, keeping track of your clients' cyber insurance, asking them whether they have cyber insurance. Some MSPs we work with, they require their clients to have cyber insurance. Others just make sure that they know what it is and know when the effective date is, if they have it, so that you can start planning, similar to yourself, 180 days to 90 days as to what they may need to do to improve their security posture and that there. Make sure that you're documenting acceptance and rejections of the proposed security upgrades. So if you go to them, they don't want that EDR solution, make sure that that's documented so they don't come back to you, if they get denied coverage, to say, hey, you didn't tell me I needed EDR. And you can say, well, yes, I did. And, here's record of that conversation. Include cybersecurity as part of your QBR process overall. And certainly insurance is a part of that, but it's really the cybersecurity component. So you're talking about it, presenting the risks that are out there that we share with our partners, what claims results are happening today. That's an opportunity for you to talk to your clients about the threat environment and what perhaps they could think about doing, or if not doing, in response to it. And then if you're answering those application questions, be clear in answering them. And sometimes those questions are confusing. As a matter of fact, often they're confusing. And don't let that get in the way of really being precise. And you can define if they say, is there MFA? Be specific on where MFA is deployed, as an example here. If there's a question you don't understand, go back to the carrier or go back to the broker and have them clarify it. And obviously, don't be afraid to add an additional piece of paper, or to write down and clarify your responses there. The don'ts, quite simply, don't misrepresent information in an application. There was a case last year where Travelers, an insurance company, rescinded coverage for a client who said they had multi-factor authentication across all sensitive assets. There was a ransomware attack. Forensics came in. found they only had multi-factor on the firewall, everything else was open, and they pulled coverage because it was a misrepresentation there. So you want to make sure, that's, you be clear as we talked about. And then in the case of a claim, one thing that I would recommend is to the first, you're in the client business, you're into supporting client and helping them, especially when they have challenges. When they have an incident, you're going to have those same motivations are going to be in play. You just have to be careful from a potential litigation standpoint of what you do. And before you start going down the road of doing a lot of mitigation, taking steps, make sure that you're reaching out to your own carrier to say what the issue is and what your plan is. We had I was talking to one MSP who spent $1 million of their own costs in rehabilitating their clients after an attack. And they went to the carrier and the carrier denied payment because they didn't ask ahead of time. And they probably would have been paid if they would have gone through the proper channels. So that's just something to think about. The other thing is, and Brianna is going to speak about this too, is kind of a setup to all this, is really as helping. How do you help the insureds or your clients in particular really understand the risk in their environment and creating roadmaps for them there. And there's a tool that Brianna is going to go over that can really help with that. And it's also a tool I'll talk about later that can also support the underwriting effort too. So Brianna?
Thanks, Doug. And honestly, 20 plus years of experience, I'm sure those do's and don'ts really apply well
Right.
with what you've seen. So, like Doug had said, I'm going to talk a little bit about how Ingram can help support you in your cybersecurity discussions of setting out a planned roadmap of how you can get customers to right size the areas that they need help in terms of their security posture in alignment to the CIS control framework, which is a framework that generally relies on in offering out quotes. So on the next slide, I wanted to touch on how Ingram can support you in advising cybersecurity through cybersecurity assessments. We have our global center of excellences worldwide. We have 3 different locations in North America, in Western Europe, and as well as APAC, where we've gathered a large technical team to help in terms of SMEs and technical consultants that can help you deliver projects in specific cybersecurity assessments and lead with that as an action plan to your customers, whether they're net new or existing. So we actually have an offer out to all of our Ingram partners where we offer 2 complimentary half-day scans, which can be used for either yourself to posture your existing infrastructure, both on-prem or in the cloud, or help in terms of motivating your customers to start having a conversation around security and implement those recommendations through your QBRs that you're regularly doing with them as an ironclad action plan for them. So why should MSPs consider leading with assessments? I think the main reasons are very obvious, but it's a great way for you to posture where your customer is in terms of products that have either been deployed by yourself or through an incumbent that you're trying to, take business fully from, just to see exactly what's been implemented and what policies have been set either incorrectly or correctly, right? So this is really just to posture where your customer stands in terms of their security. A second plan is, inclusion in QBRs. As their MSP, they're leaning on you to create some type of real action plan, an ironclad action plan that you can bring to the table and start assessing kind of the development areas for the organization in terms of their security posture, which is definitely front of mind for a lot of business decision makers. And then lastly, for VARs, MSPs that want to break into cybersecurity, and start adapting to this growing market, this is a really great way to include this as a pre-sales tool for you to help lean on our Center of Excellence and help you guide through kind of the elements of what we're scanning for, the report, and how to generally deliver that management style presentation to really motivate an upsell or a conversation around security as a whole. So I love to talk about these things in terms of how assessments can help support your ongoing business in terms of managed customers or new customers. But I want to quickly talk around the three-step process of what we generally ask partners who want to get involved with our insurance, or sorry, our cyber assessment, and working with our Center of Excellence. So on the next slide, Kathleen. The way that it works is we'll generally orient you with a 30-minute call, which is an introduction call that goes through the tool, what it does, generally what we scan for, and the results with an example report that we'll send to you. And when you start to enjoy kind of what the outcome of the report will provide, we ask that if you're interested in moving this forward with your customers, to book a 30-minute preparation call for each customer, where you're inviting the customer's technical team, if they have one, or if you as a partner understand the customer's environment, you can act on behalf, talking with our technical team in the Center of Excellence of who's going to be installing the dissolvable agent and who's going to be taking on some of the action plans for when we actually execute the half-day scan. From that point on, the last step in this three-step process is the execution of the scan, which generally takes half a day. And on the next slide, what we generally do in this half day is we take about 15 minutes of both your client and yourself's time to do some preparation, ensure that we are conducting an interview with either the IT officer at the customer or the business unit manager, just to assess what they know about their environment and where are the gaps that they believe are the gaps in their existing infrastructure. Then we'll set up kind of a secure remote desktop session, as well as install the dissolvable agent on either the client's machine or their Azure VM. Once we run the scan, which generally takes around 30 minutes, it's going to be collecting some of the endpoint diagnostics. It'll be collecting Active Directory, whether on-prem or in the cloud. All these different logs will be ingested by the agent and then will be finalized via two reports. One is going to be a document that aligns the specific controls of where the organization meets or doesn't meet, aligned to the CIS Control V8 framework. And then also a presentation deck that our Center of Excellence will be working with you to just right size whether the recommendation is the right approach from your perspective, and then either go with you to that customer meeting or prepare you with kind of the information from the scan and the findings for you to deliver on your own. So like I said, it's a really easy process. And again, all of our partners have 2 free scans that they can either use to 2 of their customers or for themselves. But this is a really great way to use real facts taken from on-premises as well as cloud infrastructure, and really get an ironclad plan to go to the table and start advising kind of the best areas for the organization to focus on when it comes to security. So with that, I know, Doug, this is a really great tool in alignment with cyber insurance. So why don't we talk about some of the next steps that partners can take in working with yourself and working with Ingram's value proposition and moving forward?
Sure, sure. Well, it is a great tool. I've had the opportunity to take a look at it, and we also look at CIS V8 controls as part of our underwriting process. So, with the next step here with Seedpod, when you do your assessment, or that report can be used to support the underwriting that we do. So if you have a client that's interested in exploring terms, seeing, can they benefit from the savings that we talked about, you can provide us with that assessment. there'll be some additional questions that we typically ask of the client that are going to be more client specific with regards to their business, loss history, et cetera. And then we can present that quote. So all you need to do is you can send that assessment or reach out to us at ingram@seedpodcyber.com, and we can provide you more detail or begin an underwriting process for one of your clients. We'd also be happy to do one for you as well for the Teck E&O
Mhm.
Cyber. Okay.
Yeah, yeah, that's really great because I think as you start to do some development of kind of cyber insurance providers, you start seeing that there is no coverage for MSPs within their line card. So I think that's a really great benefit to utilize your team, specifically on MSP coverage.
Yep.
Yeah.
Absolutely. Absolutely.
So with that, we have come to the end of our session and the topics that we wanted to focus on to educate you. I wanted to lean on the audience and see if there's any questions that you wanted to bring to the table in the last 5 minutes that we have. So in the meantime, Doug, I'm seeing a question around next gen AV and EDR both mentioned. These are seen as two separate solutions in terms of coverage, right?
They can be. Sometimes they are bundled together. In the environment, it really depends on the which solutions are in place. And Microsoft, as an example, includes both components within their the business premium and the Defender for Endpoint. So that would be an example, and including CrowdStrike, SentinelOne
Mhm,
as well.
mhm. What about insurance services for Seedpod in Canada? Is that something that you cover as well?
We we don't have direct access, unfortunately, to Canada. We do work with some partners there, so I'd be happy to talk to you or anyone in Canada, and we can make sure that you're taken care of through one of our partners there.
Perfect. And is the assessment tool at no cost, and then the results will be used to provide a quote for remediation? So I can answer the first question, which is yes, we offer 2 free scans at no cost to our MSPs for end customers or for themselves to provide kind of the real analysis of their infrastructure and what are the gaps there. And then the results in terms of using that to quote for remediations, it's more of a best practice in terms of the security gaps that they see today. But Doug, do you want to answer in terms of quoting when it comes to insurance policies?
Yeah, the results, we use the results to validate the underwriting requirements that we have. So, I mentioned CIS controls. We'll look to see, is there alignment with the controls that we are looking at. When we look at, multi-factor authentication, we want to make sure that it's deployed appropriately relative to our underwriting guidelines. The same with EDR, and that it's really covering, the endpoints and that we would expect it to cover there. So that's what we use in terms of the underwriting. Now, if they're deficient in one or in a few areas, that doesn't mean that we won't write them. They just may not maximize from the discounts that we'd have available otherwise there.
Yeah, that's a good note. And regarding the high risk industries, I think we listed off a few: healthcare, finance. Are there any more that you deem as high risk?
Sure. Well, certainly municipalities, school districts would be in the high risk category. Utilities, kind of transportation, in particular with aircraft, aviation, are also high risk areas. In addition to that, and then depending upon the any industries or organizations that are doing a high percentage of government work would also be considered high risk just because of the potential threat that from state-sponsored actions that may impact those organizations.
And then everything else would kind of fall into somewhat a
Everything
normal
else
risk.
would be degrees of lower risk, beyond that. But those are traditionally the high risk areas, there.
Awesome. So I had a question around CSAT scans, and after the 2 free scans are over, there's really 2 options for partners to move forward. So you can continue using our Center of Excellence, where it's around $900 as a professional services to deliver those scans if you want to proceed with our team. But there's an availability of the specific solution that we underpin our professional services around, which is QS Solutions. And they're actually onboarded onto our cloud marketplace as a service line. And generally, what we've seen MSPs do is they'll purchase an annual subscription for unlimited scans for their end customers, which generally range anywhere from $3,000 to $11,000, depending on which scan that you prefer. And that's, something that you can repeat as a way to encourage your QBR discussions, or offer some type of scan as a prevention tool to, act as a recommendation tool for future engagements. And I think that is the last of our questions. So thank you so much, Doug, for your time.
Yeah.
Honestly, you've offered a lot of great experience from what you've seen both on the MSP and end customer front for what insurance providers are looking for, but also kind of the gotchas that often get missed or misrepresented. I want to let everyone know in the audience that we do have a webinar coming up on June 7th that's specifically around de-risking contracts that you have with your end customers when you're starting to delve into cybersecurity services. As we can see that, MSPs to often de-risk the services and supportive elements that they offer to their customers, there are certain things that need to be written into some of the contracts that you have. So we have an IT lawyer coming in. She actually has a service on our cloud marketplace under IT Agree. And she's going to be talking through some of the use cases of examples of what to do and what not to do, especially when building contracts and delivering cybersecurity to your end customers. So we'll be happy to welcome you back. And if there's any other questions, please leave them in the chat. But thank you so much, everyone, for your time. And thank you, Doug, for being a presenter today.
Yeah, thank you. And thank everyone. Appreciate it.
Thank you all. Bye.